Go to question number 5. Rakesh Padikana.
Question 5. A and B Limited are identical in every aspect except capital structure. A does not employ debt in capital structure, but B employs 12% debentures amounting rupees 10 lakhs. Assume that all assumptions are met model. Income tax rate is 30%. EBIT is 25 lakhs. Equity capitalization rate of A is 20%. Calculate value and WACC of both the companies.
Similar sum we did yesterday also, right? Levered and unlevered form based sum. Yesterday we come across with the tax assumption or without tax assumption?
Without taxes.
Without tax. But in this question, with the tax or without tax? Tax rate is there or not in this question?
With tax.
Tax rate is 30%.
Now, which one is unlevered form?
A. Yes, sir.
Unlevered form. A. With respect to unlevered form, EBIT how much?
25 lakhs.
Less interest nil. Revati, how much the interest ma?
Sir, this EBIT last time you corrected as 2,50,000, sir.
250,000, kindly make a correction. It's still it is pending. EBIT 250,000, not 25 lakhs. Kindly make a correction. Thank you, Gayatri. Less interest balance equal to EBT. Less tax. How much the tax rate kana?
30%.
30% tax. Balance equal to earnings after tax. What about earnings after tax?
70%.
Remaining 70% comes to
1,75,000, sir.
KE available? Capitalization rate or KE available?
Yes, sir.
20%.
20%.
50 adakana 20.
20, sir.
20, sir. 20, sir. 20.
Percentage.
20, sir.
Therefore, value of the firm is equal to
8,75,000.
Any doubt in this? All are comfortable? Similar to last problem only, no? Previous problems only, no? Now, next one. Levered form. Which one is a levered form?
B, sir.
B limited. with respect to levered firm, value of the firm is equal to value of the levered firm. Levered firm is equal to value of levered firm is equal to value of unlevered firm plus
Tax sheet.
tax sheet. Nothing but unlevered firm, we got it 8,75,000.
Yes, sir.
How to identify the tax shield? Debt into
Tax rate.
tax rate. Debt into tax rate. Levered firm, you may have the debt. How much the debt fund gonna in levered firm?
10 lakhs, sir.
10 lakh.
10 lakhs, 12% they will
10 lakhs. Tax rate comes to
12%.
tax rate. I'm asking.
3
That's 30, sir. 30.
30, sir.
10 lakh into 30%.
3 lakh.
So 3 lakhs,
11 lakhs,
8 lakhs, 70. 11 lakh.
75,000.
35,000.
35,000.
Got it, my dears? Is here come?
Okay, sir.
Yes, sir.
Okay, sir.
Yes.
Haripriya. LMR book vechirukken book.
Yes, sir.
Go to capital structure with topic. Others, if you have, you can check.
Yes, sir.
MM approach with the tax and without tax assumption theory. Go to MM approach. Segregated renduga padichirukka with the tax and
Yes,
without
sir.
tax.
Yes, sir.
All of you kindly listen so that you can understand yesterday's question to today's question answer. Yesterday we come across without tax assumption. Today we are coming across with the tax assumption. Okay? Yeah, Haripriya, Padragan.
Yes, sir.
All of you kindly listen for a moment.
MM approach without tax. This approach is a refinement of the net operating income approach. The basic theory is essentially the same, but some additional proportions are made. Debt may be cheaper than equity, but the risk perception of equity investors increases with the use of additional debt in the capital employed. Increase in financial risk causes the equity capitalization rate to increase. Thus, the advantage of using low-cost debt is set off exactly by the increase in equity capitalization rate. Therefore, the overall cost of capital remains constant for all degrees of debt-equity mix. The market capitalizes the value of firm as a whole. Thus, the split between debt and equity is not important. The market value of the firm is ascertained by capitalizing the net operating income at the overall cost of capital, which is constant. The market value is not affected by changes in debt-equity mix. Such WACC is constant at all levels. Every debt-equity is as good as any other mix. There is no optimum capital structure. Every capital structure is an optimal one. The total cost of capital of a firm is independent of its methods and level of financing. Since WACC is constant, WACC at 0% debt, that is 10%, 100% equity, should be the same as WACC at any other percentage of debt. Hence, WACC equal to KE when the firm is financed purely by equity. WACC of a firm equals the capitalization rate of pure equity stream of its class of risk.
Each class.
Value of levered firm equal to value of unlevered firm. Value of firm equal to net operating income divided by KO.
That is for without tax. Yeah.
Yes, sir.
Go to with tax. Next bottom last.
Yes, sir.
Today we discuss
approach with the tax. In 1963, model was amended by incorporating tax. They recognized that the value of the firm will increase or cost of capital will decrease where corporate taxes exists. As a result, there will be some difference in the earnings of equity and debt holders in levered and unlevered firm, and value of levered firm will be greater than the value of unlevered firm by an amount equal to amount of debt multiplied by corporate tax. Value of levered firm equal to value of unlevered firm plus tax benefit.
understood kana formula value of levered firm is equal to value of unlevered firm plus tax benefit.
Tax benefit.
Previous paragraph you see the amount equal to amount of debt multiplied by corporate tax. The debt into corporate tax is called tax benefit or tax sheet. Understood? Based on the theory only, the problem has been asked. Theory will படிக்கணும் நானு.
Yes, sir.
Solution part easier கடகனா.
Yes, sir.
Wherever you come across formula, highlight the formula. Last few pages, kindly note it down the formula.
Yes, sir.
Live work or check buffer ஆயிட்டு இருக்கு.
Yes, sir. Please.
It's working. Okay.
ஸ்க்ரீன் அப் பண்ணுங்களா சார்?
என்னப்பா
ஸ்க்ரீன் அப் பண்ணுங்களா கொஞ்சம் மேலே?
நீங்களே பண்ண முடியும் சார்.
ஆ
நீங்களே பண்ண முடியும் ஆப்ரேட் பண்ண.
சரி ஓகே.
நெக்ஸ்ட் போலாமா?
போகலாம் சார்.
Yes, sir.
Yes, sir.
போனாங்களா ரூபா? அழகா
Yes,
படிங்க.
sir.
ஜாலியா படிங்க.
Company P and
ரூபா
Q
எவ்வளவு
are
எடுத்திருக்காங்க?
identical.
நல்ல பொண்ணு. படிங்க.
Company P and Q are identical in all aspects, including risk factor, except for debt or equity. Company P having issued 10% debentures of rupees 18 lakhs, while Company Q is unlevered. Both the companies earn 20% before tax, before interest and tax, on their total assets of rupees 30 lakhs. Assuming a tax rate of 50% and capitalization rate of 15% from all equity company. Compute the value of company P and Q using net income approach.
Go through the question. Now they ask you to compute in based on net income approach. Yeah. Value of the company. Statement of computation of value of firm, so nothing but value of company under net income approach. Sixth question aganadu.
Yes, sir.
Yes, sir.
Level 2 question எல்லாத்தையும் ஒட்ட ஒர்க் அவுட் பண்ணிட்டு that is more than sufficient for their examination. Okay, இந்த மாடல் தான் frequently asked model, and it has a comparative analysis of one question to another question. Particulars, what are all the company name? P and Q, am I right?
P and Q.
Yes, sir. P and Q.
How much capital employed given all respect equity and debt? Okay, 18 lakhs debt.
The total asset is 30 lakhs.
Total asset. So, asset is equal to liability, Leah. That we can consider as a capital employed. Am I right? Because that is what the available data. 30 lakhs agana.
Yes, sir.
Any return on capital employed available?
20%.
20%. Yeah.
Yes, sir.
Return on capital employed 20%. So EBIT comes to how much? EBIT 20% on 30 lakh is equal to
6 lakhs. Sir.
Based on asset, we are computing 6 lakhs. Okay. Less interest. Which one is a levered firm? Which one is unlevered firm?
P levered firm. Q
Uh-huh.
unlevered, sir.
Levered firm. Unlevered firm. Debt fund of the P, how much? Haripriya?
18 lakhs, sir.
18 lakhs. Interest percentage, if any?
10%.
So 18 lakh into 10% is equal to interest comes to how much?
1,80,000, sir.
Revati, how much interest for the second one? Interest is there or not? Revati is there or not? Mute la irukku.
Yes, sir.
சார் இன்ட்ரெஸ்டே இல்லாதனால அவங்களும் இல்லை சார்.
அதான் ரைட். உங்க அக்கா பத்தி ஒன்றும் தெரியாது. Earnings before tax comes down.
நான் மறந்துட்டேன் சார்.
4 lakhs 20, 6 lakhs.
ஹரிப்பிரியா எவ்வளோடா கண்ணா?
சார்
3,000.
4 lakhs 20,000 சார்.
420 கண்ணா? 4 lakhs.
Yes, sir.
இன்னும் ரூபா எப்போதும் ஃபார்ம்ல இருக்குமா?
Pakka, sir.
Less tax.
50%. sir.
எவ்வளோப்பா?
3%, sir.
50% sir.
50%. sir. 5 years.
50%. Very less tax only. Balance is equal to earnings after tax remaining 50%.
2 lakh 10,000, 3 lakhs.
எவ்வளோப்பா?
2 lakh 10,000, 3 lakhs.
2,10,000 and 3 lakhs அப்பா.
Yes, sir.
Yes.
Then any capitalization rate KE கொடுத்துருக்கானா பாருங்க.
Yes, sir.
Yes, sir.
15%.
15% sir.
15%.
both 15% இல்லையா?
Yes, sir.
So value of equity is equal to 2,10,000 divided by 15%.
14 lakhs for P.
14 lakhs agana.
Yes sir.
Sir.
And here
20 lakhs.
28 agana.
20 lakhs.
What plus what is equal to value of the firm? Value of equity plus
Equity plus value of debt.
Only of the
debt is equal to
18 lakhs.
value of debt only for the first one. Clear?
Yes sir. 18 lakhs.
So total
32 lakh.
32 lakh 20 lakhs.
20 lakh.
32 lakhs and
20.
20 lakhs.
put it on for now. ಇದು ಪುರಿದಪ್ಪ
Sir.
ನಿಕಾರಿಕರ ಪ್ರಥಮ ಇಂತಕನು
20% எப்படி சார் வந்து ஆர்ஓசி ரோசாட் ரிட்டர்ன் கேபிட்டல் எம்ப்ளாய்ட்
company earns 20% before interest and tax தெளிவா கொடுத்திருக்காங்க. both the company earns 20% before interest and tax to the total assets கொடுத்திருக்காங்க.
ஓகே
so assetல 20% போட்டுக்கணும் அவனே சொல்லிட்டான். that's like return on asset. Instead of you can take it as a return on capital employed, you can call it as a return on asset because it's specifically mentioned asset. You can call it as a return on asset itself. So that will get the better clarity. புரியுதா? capital employed போடணும் நாங்கன்னா okay return on
Yes, sir.
asset நே போட்டுப்போம். ஏன்னா அது specifically given இல்லையா on asset னு. so return on asset 20%. now it is okay.
எஸ் சார்
பரதநாட்டியம் இந்த முத்து பாத்தியடா
Sir, yeah, sir.
வைரல் ரேவதி வேற அழுறா. நான் என்ன மட்டும் விட்டீங்கன்னு முத்து என்ன பெரிய ஆள் நான் சின்ன பொண்ணு அப்படிங்க. நான் பெரிய ஆள் தான். நைட் அவங்களும் போடுறோம். ஓகே முத்து.
சரி sir.
உன் ஆத்மா சாந்தி அடையும். முதல்ல ராகேஷ் ஆத்மா தான் சாந்தி அடையும். ஒன்ன விடு.
ராகேஷ் என்னைக்குமே அக்காக்கு தான் சாப்பிடுவோம்.
இப்ப கொஞ்ச நேரம் பார்த்தேன் எப்படி டேமேஜ் பண்ணான்ட்டு. அப்புறம் என்ன
கொஞ்ச நிமிஷத்துல மறந்துட்டான் சார்.
சார் ஏதாச்சும் பேசிட்டு இருக்கீங்களா சார்? இப்பதான் சார் வந்தேன்.
ஆமா ஆமா பார்த்தோம். நான் பார்த்துட்டு
விஜய் ரொம்ப அமைதியா இருக்காரு.
இப்ப எல்லாம் வெயிட் பண்ணுங்க, அவங்களுக்கு பிடிக்கும்.
விஜயக்கா வர ரொம்ப சைலண்டா இருக்கு.
ஆமா சார்.
சாப்பிட்டு உங்களுக்கு பேச முடியும். சர்ச்சனா சொல்லுப்பா. ராகேஷ் புரியுதா கண்ணா?
Yes, sir.
Yes, sir.
சரி பிரியா.
சார்.
நெட் இன்கம் அப்ரோச் பேஜ் நம்பர் 145 எடுத்துக்கோ.
எஸ் சார்.
எல்லாம் காப்பி பண்ணியாச்சா கண்ணா? கீதா மேடம் வந்திருக்கோம். வந்தாச்சா? வெல்கம் மேடம். Kindly listen. Net income approach.
Yes, sir. Copied, sir.
Okay. Nigarika, understood?
Yes, sir.
Listen the theory.
Okay, sir.
According to this approach, capital structure decision is relevant to the value of the firm. An increase in financial leverage will lead to decline in the weighted average cost of capital, while the value of the firm as well as market price of ordinary share will increase. Under net income approach, the value of the firm will be maximum at a point where weighted average cost of capital is minimum. Thus, the theory suggests total or maximum possible debt financing for minimizing the cost of capital. 1. Debt is a cheaper source of finance than equity due to tax saving effect and investors' risk expectations. 2. Use of cheaper debt fund in total capital structure will reduce the overall cost of capital. 3. Hence, as the degree of financial leverage increases, the WACC will decline with every increase in the debt content in total fund employed. 4. Since value of firm equal to EBIT divided by WACC, the value of firm will increase for every decline in WACC. 5. Thus, a firm can increase its value and lower the overall cost of capital by increasing the proportion of debt in the capital structure. 6. The value of the firm will be maximum at a point where WACC is minimum. Thus, the theory suggests total or maximum possible debt financing for minimizing the cost of capital. Value of the firm equal to market value of equity plus market value of debt. Value of the firm equal to EBIT divided by KO. Market value of equity equal to earnings available to equity shareholders divided by KE.
Got it, my dears? Based on that only is solved. This is the easiest theory. You can remember the trading on equity, merge it with the same line with the trading on equity only. In net income, what they are saying, with respect to it, cost of the debt is cheaper than cost of equity. That is what we discussed in the very first class. Right? Characteristics of source of. Reason also they are mentioning, debt content means tax benefit is there. Risk factor with respect to investor side is less. Therefore, expectation also will be less. More risk means more return, less risk means less return. Right? If you are an investor, Kailash is investing in my company, he is purchasing shares. Rakesh also investor, he is investing in my company, he purchased the debenture. Then who is taking more risk, Kailash or Rakesh?
Kailash.
Because equity shareholders taking more risk, because equity shareholder will get the dividend only if there is a profit. Better, whereas debenture holder guaranteed income by way of interest. Return should be high to what? More risk means more return, less risk means less return. Right? Since Kailash is taking, shareholders are taking more risk, we have to pay more and more dividend. Percentage of profit you have to give. Whereas less risk only for the Rakesh, it's a debenture holder. Therefore, fixed amount of income only can get. Am I right or not? Therefore, overall company's point of view, less cost in the debt fund one. Two main reasons. One is dividend expectation of the shareholders are always higher than interest expectation of the loan holder. Second one is the interest mean tax benefit is there. Debt fund mean tax benefit is there. Whereas shareholders fund, there is no tax benefit to the company. Then that's the reason if you go more and more debt, overall cost of the company will come down. So where the more where we are getting more least weighted average cost of capital, that capital structure is advisable or preferable. That is what normal way of talking in the capital structure itself. The same thing they are telling in the net income approach. Clear? Then
Yes, sir.
value of the firm is equal to what? Debt plus equity equal to value of the firm. That debt represents market value of the debt plus market value of equity is equal to overall cost, overall value of the firm. We have no alternative way to find the formula. Value of the firm is equal to EBIT divided by KO is equal to value of the firm. Value of equity is equal to earnings available to equity shareholder by KE is equal to value of equity. It's the simplest one. Even if they are going to ask direct theory question, easily have to score 4 marks. Logic puriyuda kanna? Okay.
Yes.
Now, here also tax is there. approach also tax is there. Right? Whereas here tax with respect to what? Value of debt plus value of equity is equal to total value. Whereas in approach, with the tax assumption, without tax mean that unlevered and levered form, there is no difference at all because there is no tax benefit. With the tax mean, even the also changed it. Okay, with the tax only possible after one particular point of time. Then with the tax mean that in value of the levered form is always get higher value than value of unlevered form because of the tax benefit. Therefore, value of the levered form is equal to value of the unlevered form plus additional benefit. Debt into tax benefit is equal to what? Value of the levered form. So if you comparatively, if you are going to study, very easy for it to understand and address the questions. Now we are moving to the next important concept. Question number 7. Count the question, Anapa.
Yes, sir.
Kailash, Patra.
Sir,
7th question, Kailash.
sir,
There are two companies, Limited and M Limited, having same earnings before interest and taxes, that is EBIT of rupees 20,000. M Limited is a levered company having debt of rupees 1 lakh and 7% rate of interest. The cost of equity of M Limited is 10% and of M Limited is 11.50%. Compute how arbitrage process will be carried on if you are having 10% holding in M Limited.
They are asking you to prove the arbitrage process. Before we solve the problem, you should be in the position to know what is called arbitrage. With respect to arbitrage process. Suppose, easy way to understand the arbitrage. Suppose you are going for any outstation. Whenever you go for outstation, Revati is in Madurai, am I right? She is visiting Delhi for lunch. At the time of shopping, you will buy the product. Before you are going to buy the product, you will analyze that product price is cheaper than my local market or not. Am I right? In Madurai, you are having the similar product. 2,000 rupees that product cost. In Delhi, similar product is 1,500 you may buy. Am I right? If it's more than that, why should I buy it from here? Why should I buy thereafter and carry from my place, this place to next place? Clear? Then, if it is cheaper in one particular place, you may do what? Buy the product from where it is cheaper, and you may do trading in the where the product price is high. Am I right or not?
Yes, sir.
That is also possible or not possible?
Yes, sir.
All
Yes,
of
sir.
you possible. Therefore, in low rate place, we may going to buy the product. In which place this has higher value, we may going to sell the product so that we can get some leverage without any much risk. Am I right or not? Delhi 1,500 rupees, they are selling the product. I am coming to my hometown, Madurai, and she is selling what? At 2,000 rupees without any much risk. She may going to get 500 rupees profit. Am I right?
Yes.
Concept is called leverage. This concept is called what? Arbitrage. That arbitrage process, instead of product, it's called stock. Instead of product, it's called stock or shares. Clear? So where it is low price, where it is high price, that we have to identify. Accordingly, whether you have to buy or sell, decision we have to do. Shall we try?
Yes, sir.
Concept Purida?
Yes, sir.
Now.
Yes, sir.
Sir, I have a doubt with respect to WAC. Okay, sir.
Question number nine.
7.
Answer.
Fine.
Particulars. என்ன கம்பெனி இருக்குப்பா?
M&M, sir.
N Limited, M Limited.
M levered.
Which one is a levered? Which one is unlevered? Kanna?
M levered company, sir.
M levered.
N unlevered.
Levered company. Unlevered company. Now all of you understand what is called levered and unlevered, Kanna?
Yes, sir.
Yes, sir.
Debt fund is there or not? Second area. Now, EBIT
20,000.
20 Kanna?
Sir.
Yes.
3,000, sir.
Yes,
20,000,
sir.
sir.
Both the companies, right?
Yes,
Yes,
sir.
sir.
Yes, sir.
Yes, sir.
Less interest. In case of levered, only interest will come. Debt fund is how much for the levered company?
7,000.
1 lakhs.
1 lakh
1 lakh into
rate
7%.
7%.
7,000. Interest is 1 lakh into 7% is 7,000. Therefore, earnings before tax comes to
20,000, 13,000.
3,000, 13,000.
under
13,000.
13,000.
less
Thanks.
tax. Any tax rate given
No, sir.
No, sir.
for forward sake, you can try so that you have a better clarity. So, earnings after tax. How much earnings after tax?
20,000, 13,000.
Any capitalization rate, KE given Kanna?
Yes, sir.
KE is equal to
10%, 11.5%.
so value of equity is equal to
2 lakhs for N.
E.
1,13,043, sir.
043.
1 lakh
13,000.
13,043, sir.
0.4
3.
add value of debt. Oh, only for second Kanna? Value of debt all
1 lakh, sir.
So value of the firm 2 lakhs and 2 lakh 13,000
2,13,043.
0. So value of the firm, which one is high, which one is low?
M limited is high. N limited.
Low
Leeward
and
High.
therefore trading.
buy low, sell high.
Lower you have to buy. Clear? And here you have to sell. Up to this stage, are you comfortable?
Yes,
Yes,
sir.
sir.
This was not running. The respect to arbitrage process. Up to this stage, can you?
Finished, sir.
All of you completed. No?
Yes, sir.
Yes, sir.
Yes, sir.
Now only I need to double the normal concentration to understand the arbitrage process. Now you understood where to buy and where to sell. Up to this stage, are you comfortable?
Yes, sir.
Yes, sir.
In this question, they are telling you are having shareholding of how much percentage? 10% in
10%.
M Limited. Am I right? You are having 10%
Yes,
in M Limited. Am I right?
Yes, sir.
That 10%, whether you have to buy or sell?
Sell.
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 So,
Sell.
if you are holding 10%, 10% on this comes to 11,000.
304.
304.
This is what you have to sell. Am I right or not? So, 10% holding in M Limited. M the name
M, sir.
Yes, sir.
M Limited. The arbitrage process. Sell 10% of M Limited shares. How much cash you can get? 11,000,
304.
because that's what the total value of the phone. You are going to tell 10%. If you are going to sell 10%, you'll get 11,304 rupees. That you have to buy in where? You have to buy it in
Unlevered firm.
unlevered. Yeah, next.
Limited.
But if you want to have the comparison, M Limited with debt or without debt?
With debt.
If you are going to invest the fund in N Limited, that is with debt or without debt?
Without debt.
Then both are not comparable.
Yes.
Both are not comparable. So, because M Limited presently are holding share, after paying interest only your benefit will be there. Your shareholders' benefit will be there. Whereas N Limited, if you are going to buy the shares from N Limited, there is no debt fund at all. There is no interest component. Am I right? Therefore, both are not comparable. So, if you want to compare, after paying interest only, the beneficial or not, you have to identify. Am I right or not? Costing, we come across one concept is called the opportunity cost, imputed cost and all. For example, Muthu is doing the business. Out of it, he earned a profit of 10 lakhs. Similar period, I am also having one business. I also earned the profit of rupees 10 lakhs. Even though both are 10 lakhs, Muthu is doing the business in own premises. I am doing the business in the rented premises. Between two, which one is profitable company? Muthu Limited or Hariharan's Limited?
Muthu Sir Limited.
Shall I repeat the question once again? Shall I repeat the question once again?
Yes, sir.
I am doing in business in the rented premises, earned a profit of 10 lakhs for the one particular period. Muthu is having the similar business in own premises, he earned a profit of 10 lakhs. Between two, which company having more profit?
Your company.
Muthu Sir company.
Your company, sir. After paying rent.
Even after paying rent, I'm having 10 lakhs. Yeah? But without paying rent, he is having 10 lakhs. Therefore, so my company is better than what? Muthu's company. Am I right or not?
Yes, sir.
Similarly, one is with debt, another one is without debt. Therefore, I am selling from the levered company, I am getting 11,304. There I am going to invest unlevered company for the purpose of better comparison. Debt fund, I am borrowing. Borrow means debt only, no? I am borrowing 10% to maintain the same debt. Because I can't ask the company to borrow. So, I am borrowing my end to maintain the same risk class. 10% debt. How much the debt fund in M Limited?
1 lakh.
1 lakh.
1 lakh.
1 lakh.
If I'm having holding of 10%, it's 10,000. So I'm going to borrow 10,000 from the outside market. Borrowing from the outside market. Or you got the clarity or not?
Yes, sir.
Yes.
Therefore, how much the total cash am I available?
21 lakh.
304.
Total cash. இந்த ஒரு பாயிண்ட் கேர்ஃபுல்லா புரியணும். இது புரிஞ்சுதா?
Yes, sir.
Maintain the same risk class. For the purpose of maintaining same risk class, I am borrowing 10,000 rupees. Okay.
Yes. Yes.
So totally, I will have the cash of 21 lakh. So 21,304.
304.
That I can invest in which company? N Limited. Clear? Invest. Nothing but buy. Same 10% from N Limited. Am I right or not? N Limited. Value of equity of N Limited is how much?
2 lakhs.
2 lakhs. Out of it, 10% if I'm going to hold, 20,000 I have to. Clear?
Yes, sir.
I have to invest nothing but I have to pay 20,000 rupees. Got the clarity?
Awesome.
So same 10% holding, I will have the surplus cash. Ilya? How much the surplus cash I will have?
1,003 now.
1304.
I'll have the surplus cash of 1304.
Oh,
If I'm going to invest the same in N Limited, I'll get a return on investment. Same 10% from N Limited. Am I right or not? If you are holding 10%, 10% of the N Limited income is your income. How much earnings to the what? Total earnings for N Limited, earnings available to equity shareholders.
20,000.
Out of which 10% you will get. Am I right or not? Like 11,304 you got it. Now, similarly, 10%, 20,000 into 10% you will get. You are the owner of that 10%. Comes to how much, Kana?
2,000.
Surplus cash 1,304 and you'll get the profit of 2,000. Clear? Or with me or not?
Yes, sir.
Sir,
Even though I'm getting profit, out of profit I have to pay interest which I have borrowed. Am I right? For maintain the same risk class. How much I borrowed?
10,000, sir.
10,000 I borrowed. Further, you have to pay interest. How much percent interest?
13,000, sir.
13% agana.
Yes, sir.
Interest on
10%.
interest on borrowing எவ்வளவு கொடுத்திருக்குன்னா
7%.
7% rate of interest.
7% இல்லையா?
7%. Yeah.
7%. So you have to pay interest. Out of profit only you have to pay interest. How much interest you are going to pay? 700.
700.
So 2,000 you are earning and 700 you are paying as a tax. Therefore, net benefit எவ்வளவு return எவ்வளவு கிடைக்குது உனக்கு?
1,300.
1,300.
Nothing but return is equal to 1,300.
300.
You'll get the 1,300 return. Got the clarity now?
Yes, sir.
Yes, sir.
So 1,300 return. If you get 1,300 return, listen here. 13,000 to 10% all over.
1,300.
1,300. So M Limited what? M Limited also previously got 1,300. If I'm going to sell and if I'm going to buy it from N Limited also, you're going to get same 1,300. In addition to that, you'll have the surplus cash of how much?
1,304.
That concept is called leverage analysis. If your asset is there in the M Limited, you'll get the 1,300 alone is the profit. Am I right? Whereas if I invest in some other company, 1,300 benefit, same benefit I'm getting it because same 10%. Plus I'm having excess cash as surplus cash with the same class of risk class. Got it, my dears? This concept is called arbitrage. Note பண்ணிக்கணும். Completed?
Yes, sir.
Shall I explain
Yes.
one more time? Shall I explain one more time?
Yes, sir.
Okay, sir.
Yes, sir.
கவனிச்சுக்கோ. It's a new concept. கொஞ்சம் கவனிச்சுக்கோ. First two companies. One is without debt, another one is with the debt, unlevered and levered. EBIT remains same. After paying interest, balance equal to EBIT. So that is the earnings available to shareholders. KE given in this question, therefore value of the equity plus value of the debt is equal to total value of the firm. With respect to value of the firm, high value and low value, 2 lakh and 2,13,000, high and low. Based on arbitrage process, where we are having high value, you have to sell, and where we are having low, we can buy. Clear? In this question, they have told what? You are having 10% holding in M Limited. That information available in this question. Am I right? If you are having 10% holding, if you can sell 10% of your share, because here you have to sell the stock. If you are going to sell, you will get the cash of 11,304. Total value 1,13,000. You are having 10% means that share, if you are going to sell, you will get 11,304. Up to this stage, are you okay or not?
Yes, sir.
So after selling, you'll get 11,304.
Yes.
You are holding in M Limited. M Limited is also having debt content. Am I right? Up 10% of debt also, you are liable. Am I right or not? So if I am going to invest the money in next company, N Limited not having debt, therefore both are not same risk class. Therefore, you can't the person to get the debenture, but you can borrow from outside. Ultimately, we need what? Debt content. So I'm selling the share, I'm getting 11,000. For the purpose of maintaining the same risk class, 10% of debt of the previous company, the M Limited, is equal to 10,000. The 10,000 amount I'm borrowing from outsiders. Got the logic, Anar? Therefore, total cash in my hand comes to borrowed fund 10,000 plus sold share 11,304. 21,304 will have the cash in your hand. Now, out of the available money, I am going to invest in the N Limited. You are holding 10%. Therefore, the same 10% you are going to purchase from N Limited. If you are going to buy same 10%, value of the firm 2 lakhs, out of which 10% is equal to 20,000 worth of the shares you have to buy. Am I right? So out of 21,304, 20,000 you paid for the purpose of buying the next company shares, same 10%. Remaining surplus cash comes to how much? 1,314. 304 upon 1,304. Am I right? Are you clear with respect to the remaining surplus cash? Then,
Yes.
for the purpose of verification, if you have invested in N Limited, 10% return you can get. What about the 10% return? 20,000 is a
Return.
total earnings from the company. Out of which 10% is equal to 2,000, you get the profit. Am I right? Out of 2,000 profit, because you invested in N Limited, out of the profit, you are going to get 10,000 percentage, 2,000. Out of 2,000 profit, you have to pay interest because you borrowed the fund. Thereafter only invested. Borrowed the fund 10,000, out of which you are going to pay 7% interest. So if you are going to pay 7%, then remaining return comes to net benefit and net return comes to 1,300. If you verify previous company also, total earnings is equal to 13,000. Out of which 10% holding means same 1,300. Up same 1,300 from M Limited to N Limited, if you are going to change, you can get plus extra benefit of what? Surplus cash of 1,304. That concept is called arbitrage process. It's a beautiful question or not?
Yes, sir.
சார் அந்த 10,000 மட்டும் இருக்குல்ல சார், அது மட்டும் சொல்றீங்களா சார்? 10,000 ஏன் எடுக்கிறோம்னு சொல்லிட்டு
10,000 எடுக்கணும்னா
ஏன் 10,000 rupees?
Yeah, borrow the 10,000 represent. அதானே கேக்குறேன், borrowing 10,000 கேக்குறேன்.
ஏன் அது 10,000 எடுக்கிறோம்? 50,000 அந்த மாதிரி வேற இதுல ஏன் அந்த அமௌண்ட்ல எடுக்கிறோம்னு கேக்குறேன் சார்.
இல்ல 10,000
எஸ் சார்.
borrowing தானே கேக்குறேன், நான் அதான் சொல்றேன்.
கரெக்ட் சார்.
பிகாஸ் 10% என்ன, இந்த கம்பெனில எவ்வளவு லோன் இருக்கு, டெட் ஃபண்ட். யூ ஆர் மூவிங் ஃப்ரம் M to N போற.
எஸ் சார்.
Mல எவ்வளவு ஹோல்டிங்ஸ் இருக்கு, டெட் எவ்வளவு இருக்கு?
1 lakh சார்.
அதுல 10% மீன்ஸ் how much?
10,000.
You are the owner of the company, shareholder இல்லையா? 10,000.
Okay, yes, sir.
அப்போ சேம் 10,000 அப்போ தான் கம்பேரபிளா இருக்கும். If you want to maintain same risk class, 50,000 தான் comparable கிடையாது. You are having only 10% holding no பண்ணலாம்.
Okay, okay, sir.
That's right. Understood.
Okay, sir.
Both
Sir,
have to maintain the same
that
risk class. Yes, Kalidans. Krishnada, சொல்லுப்பா.
சார் இன்ட்ரெஸ்ட் ரேட் இருக்குல்ல சார், அதாவது 7 தான் இருக்கு கம்பெனி. நம்ம 10 எடுத்துக்கிறோம் சார், 10% போட்டிருக்கோம். 7 தான் இன்ட்ரெஸ்ட் ரேட் இந்த கம்பெனி. M11
7 தான் போட்டுருக்கோம் பாருங்க.
10,000 டோட்டல் அதான் சொல்லியிருக்காரு சார்.
10,000 700 தான் போட்டுருக்கோம். 7% தான் போட்டுருக்கோம்.
இந்த புக் வேல்யூ போடுறப்ப சார் இங்க 10% போடும். மேல இன்ட்ரெஸ்ட் கண்டுபிடிக்கும் சார்.
எங்க
அவுட் சைட் பாரோ பண்றோம் சார். அவுட் சைட் பாரோ பண்றப்ப நம்ம 10%
இல்ல அது 10% ஆஃப் டிபென்ச்சர் ஓட டோட்டல்.
டிபென்ச்சர் டோட்டல் டிபென்ச்சர் ஆஃப் தி M Limited 1 lakh, out of which 10% debenture we are borrowing. That way 10% debt we are borrowing. It's not an interest component. Debt 10%. M Limited you are having 1 lakh, adula 10% is equal to 10,000.
Okay.
Okay.
சார் இதுல ஒரு டவுட் இருக்கு சார்.
சொல்லுப்பா.
சார் ஈவன் அப்புறம் இந்த கேஸ்ல சர்ப்ளஸ் வந்துட்டு கேஷ் இன் ஹேண்ட் 1304 நம்ம கையில் இருந்தாலும் ஃபியூச்சர் இன்ட்ரெஸ்ட் இன்கம் கிடைக்க வேண்டியதெல்லாம் நமக்கு போயிடும் சார் ஃப்ரம் த லீவர் கம்பெனி.
ஃபியூச்சர்
இன்ட்ரெஸ்ட் இன்கம் அவங்க கிட்ட இருந்து கிடைக்கும்ல சார், அதை நம்ம ஃபர்கோ பண்றோம்ல சார். அப்ப அந்த வேல்யூ ஜாஸ்தியா இருந்து
இல்ல, you are having only shares and not in debt fund kanna. For maintenance of the same risk class only you are borrowing loan. In M Limited you are not having any debt holding, you are having only shareholding.
Okay sir.
இல்லையா? அதர்ஸ் நிகாரிகா எல்லாருக்கும் புரிஞ்சுதா?
Yes, sir.
சார் understood.
சார் அந்த பேக் லோட் கேட்கலாமா சார்?
சொல்லுப்பா.
சார் நம்ம அதில் என்ன படித்தோம் அப்படின்னா காஸ்ட் ஆஃப் டெட் வந்துட்டு கம்பெனி சீப்பராக இருக்கிறதுனால மோர் டுவர்ட்ஸ் டெட் ஃபண்ட் போகிறதுக்கு இது இருக்கு. அண்ட் மோர் டுவர்ட்ஸ் டெட் ஃபண்ட் போனால் எனிவே வந்துட்டு ஷேர் ஹோல்டரோட எக்ஸ்பெக்டேஷன் அதிகமாகும்ல சார்?
என்ன அதிகமாகும்?
ரேட் ஆஃப் ரிட்டர்ன் அவங்க எக்ஸ்பெக்ட் பண்ணுறது அதிகமாகும்ல சார்? ஸோ அப்போது ஓவரால் காஸ்ட் ஆஃப் கேபிட்டல் குறையிறதுக்கு பதிலாக திருப்பியும் நல்ல எஃபெக்டில் தானே சார் வந்து நிற்கணும்?
காஸ்ட்ங்கிறது வாட் எவர் யூ ஆர் கோயிங் டு பே டு தி டெட் ஃபண்ட் தானே. இப்போ டிபெஞ்சர் கொடுத்தாச்சுன்னா பேலன்ஸ் ஃபண்ட் எல்லாம் டிவிடெண்டா கொடுக்க போற, பேலன்ஸ் வர ப்ராஃபிட்ல இருந்து கொடுக்க போறாங்க. அப்ப அல்டிமேட்லி வெல்த் மேக்ஸிமைசேஷன் கான்செப்ட் எடும்ல உனக்கு. நம்பர் ஆஃப் ஷேர்ஸ் குறைய குறைய ஏர்னிங்ஸ் ஜாஸ்தி தானே ஆக போறது. பேலன்ஸ் ஏர்னிங்ஸ், பேலன்ஸ் அவைலபிள் ஃபண்ட்.
எஸ் சார். அப்புறம் அவங்க நிறைய எக்ஸ்பெக்ட் பண்ண ஆரம்பிக்கும் போது நம்ம கேடி வந்துட்டு குறையும் போது ஓவரால் காஸ்ட் ஆஃப் கேபிட்டல் குறையும்னு சொல்லிடலாம் சார். ஆனால் கேஇ அதிகமாச்சு அப்படின்னா ஆட்டோமேட்டிக்காக அது நல்லிஃபை ஆகி கடைசியில் ஓவரால் காஸ்ட் ஆஃப் கேபிட்டல் குறையாமே போயிடும் சார். அப்படியே நிற்கும் சார்.
டிவிடெண்ட் பே அவுட் ரேஷியோ we are only going to decide இல்ல கண்ணா. We are not going to pay the fixed amount of dividend. How much you have to pay towards retain earning, how much you have to pay as a dividend. 1 crore profit இருக்கலாம், 100 crores profit இருக்கலாம். Out of which only you are going to pay dividend. Because interest element remain constant right now. Balance, everything is going to the shareholders fund. The shareholders fund partly are going to pay as a dividend and partly are going to transfer to reserves and surplus, retain it. இல்லையா? புரியுதாப்பா? ரேவதி அடுத்த क्वेश्चन படிங்க.
The following data are presented in respect of Quality Automation Limited. Profit before interest and tax 52 lakh, less interest on debenture at 12%, 12 lakh. Profit before tax 40 lakh, less income tax at 50%, 20 lakh. Profit after tax 20 lakh. Number of equity shares of 10 each, 8 lakh. EPS 2.5, PE ratio 10, market price per share 25. The company is planning to start a new project requiring a total capital outlay of 40 lakh. You are informed that a debt equity ratio D/D plus E higher than 35% pushes the KE up to 12.5%, means reducing the PE ratio to 8 and raises the interest rate on additional amount borrowed to 14%. Find out the probable price of share if the additional funds are raised as a loan. The amount is raised by issuing equity share. Note, retained earnings of the company is 1.2 crore.
Depending upon the debt equity ratio, they are given the formula for the debt equity ratio. Numerator debt, denominator capital employed, debt plus equity. That is higher than 35% means KE 12.5%. Clear? And the price earning ratio 8. Originally now KE எவ்வளவு இருக்கு? Whether you have to compute or that. Okay. Now the requirement of the question, additional fund should be raised. Additional home fund for 40 lakhs should be raised as a loan or equity. Am I right? Shall we try?
Yes, sir.
Start பண்ணலாமா? Question number?
Yes, sir.
8, sir.
Statement of evaluation of capital structure. Particulars. Option 1. Additional fund by way of what?
Loan.
Debt. Loan or debt. And the option 2 negative additional fund by way of
Doing equity share.
equity. Start பண்ணலாமா? Any return on capital employed is there? How much of original capital employed first? Currently capital employed எவ்வளவு கண்ணா? இதா கொடுத்திருக்கானா கொடுக்கலையா?
Not given.
Total capital outlay
40 lakhs.
Total capital
40 lakhs. 40 lakhs.
Planning new project is 40 இல்லடா கண்ணா?
Yes, sir.
Okay.
Yes, sir. New project.
Existing? How much the debt fund? How much the debt fund kanna?
12 lakhs sir.
Retain earning 12 lakhs kanna?
The retain earnings
1.2 crores.
1.2 crores.
1.2 crores another retain earning அப்பா?
Retain earnings, sir.
Yes, sir.
Debt fund எவ்வளவு இருக்கு?
1 crore.
1 crore, sir.
Currently
Debt 1 crore.
1 crore.
Retained
sir.
earnings 1.2
currently 1
crores.
crore, am I right?
Yes, sir.
It's sir.
Then equity fund,
Sir, 80 lakhs.
3 lakhs.
how come 80 lakhs?
Sir, number of equity
Number
shares
of
of 8 lakhs.
8 lakh.
Number of equity shares of 10 is equal to
8
80,000. 8 lakh into 10 is 80 lakhs. Am I right?
Lakh shares. Yes, sir. So 80 lakhs equity value. Total capital 3 crores.
Total 3 crores worth kanna.
Yes, sir.
ಆಯ್ತು
ಸರ್
Yes, sir.
கொடுக்குமா working note. A return on capital employed is equal to EBIT divided by capital employed into 100. With respect to EBIT, equity share capital for the current situation 8 lakh into 10 agana.
Yes. Shares 8 lakhs into 8.
Number of shares
Into 10.
8 lakh into 10 illedagana
Yes, sir. 10.
Yes, sir.
80 lakh. Retain earning 1 crore 20 lakhs appa.
20 lakhs.
Debt fund எவ்வளவு இருக்கு currently
1 crore.
Crore, sir.
available? I have to compute.
Compute, sir.
We have to compute not divided by 12%.
Interest
Interest on debentures amount to
Interest
rate
divided by
interest எவ்வளவு இருக்கு? How much?
12,000.
12%.
12 lakh.
12 lakhs. Sorry, sir.
12 lakhs.
Rate வந்து 12%.
12% போட்டேன்.
12% interest rate.
So capital employed comes to
3 crores.
3 crores.
3 crores.
3 crores.
300 lakhs.
capital employed we got it 3 crores. EBIT. How much
52 lakhs.
EBIT
52 lakhs.
கொடுத்திருக்கோம்
Yes, sir.
Yes, sir.
Profit before interest and tax.
given in this question itself 52.
Yes, sir.
So return on capital employed comes to
17.33%.
17.33.
17.3.
333%, sir.
333%.
17.333%. Any difficulty?
No, sir.
All of you got it, my dears? இது புரியுதா கண்ணா?
Yes, sir.
Yes, sir. Yes, sir.
Next. If you go with a loan, so how much the loan amount?
40 lakhs.
40 lakhs appa.
Yes, sir.
Okay. Then
Additional.
what could the revised capital employed? What could the revised capital employed?
3 crore 40 lakhs.
3 crores.
40 lakhs.
Out of your return on capital employed போடு எவ்வளவு வருது பாரு 3 crores 40 lakhs into 17.33 போட்டா என்ன வருது?
uh, 1,200.
என்னப்பா?
58 lakhs into 1,200.
Listen here, my dears. We are having equity share capital, return earning, and debt fund. Clear agana?
Yes.
Currently, equity share capital is at 8 lakhs. Am I right? 80 lakhs. Am I right?
Yes, sir.
Yes, sir.
Retain earning 1 crore 20 lakhs.
20
Yes,
lakhs.
sir. Right.
Currently, we are having debt fund of
1 crore.
1
1
crore.
crore.
1 crore plus additional fund by of debt here. First option. 1 crore plus 40 lakhs. Clear?
40 lakhs.
Okay.
So, what could be the capital employed now?
3 crore 40 lakhs.
3 crores 40 lakhs.
3 crores 40 lakhs. Got the logic?
Yes, sir.
Second situation, 80 lakh is a original equity shares plus 40 lakhs you are getting as a additional fund by way of equity. 80 lakhs plus 40 lakh is equal to
1 crore 20
1 crore
lakhs.
10 lakh.
1 crore
20
20
lakhs.
lakhs.
retain earning remains same 1 crore 20 lakh.
20 lakhs.
1 crore.
Debt fund 1 crore.
Debt fund only 1 crore. Our capital employed comes to 3 crores
3
40
crores 40 lakhs.
Originally 3 crores, that 40 lakhs either by way of debt or equity. That is what we bifurcated. Am I right?
Yes, sir.
EBIT is equal to at the rate of what percentage? 17.33 or 7.33?
17.33.
10.33.
17.33%. Apply 17.33% for 3 crore 40 lakhs.
50.
58,92,200.
After getting the additional fund, we'll get the profit of 58 lakhs 90.
92,200.
200.
EBIT less interest. How much the interest on? Interest on old debenture
12.
12 lakhs.
12 lakhs.
12 lakhs.
on old debt 12 lakhs.
Yes, sir.
Now, additional fund how much? 40 lakhs by way of debt means applicable only in case of the first column. Am I right?
Yes, sir.
Yes, sir.
For the
14.
purpose. How much they are saying interest amount?
14%.
14%.
When in this question or not?
Yes,
Given.
sir. Interest rate on additional amount borrowed.
New debt or additional debt. 14% on 40 lakhs comes to
5 lakhs
5 lakhs
60,000.
60,000.
5,60,000.
balance is equal to earnings before tax. How much the earnings before tax can now?
$41 lakhs
41,32,200.
41 lakh 32,000.
200.
200.
Option 2, 46 lakh 92,200.
$200.
Yes, sir.
Yes.
Okay. Next. This what earnings before tax. Am I right?
Sir. 46 lakhs 92,200, sir.
46, 96, 200, right?
92.
92,200.
92.
Totally correct, sir. 92,200.
92,200. Less tax. How much percent tax?
Just 50%, sir.
50%.
Balance is equal to earnings after tax. The kalavarthi of the kuduvalam remain 50% comes to Rakesh. Earnings after tax.
Sir, 20 lakhs 66,100.
20 lakhs
66,100.
here.
23 lakhs
23 lakhs for
100.
46,100.
Any doubt up to this stage? Now, this is the earnings after tax divided by number of equity shares. How much the number of equity shares? 8 lakhs for the first
8
equity.
lakhs.
Yeah, because additional from debt only. Additional by way of equity means 8
12
lakhs.
lakhs.
8 lakhs plus எவ்வளோட
4 lakhs.
40 lakhs or 4 lakhs? Yeah. Share capital value இருக்கு
40 lakhs.
Share
80 lakhs
capital
plus 40 lakhs.
அப்ப number of
1
shares
crore 20 lakhs. 12 lakhs.
but they are given some information. If the debt equity ratio change on என்ன சொல்லிருக்கான்?
Put 12.5%.
என்னப்பா?
Cost of
12.5%.
equity will increase to
equity
12.
ratio higher than 35% pushes the cost of equity up to 12.5.
Okay. First option, debt. How much is that debt? We have to identify debt equity ratio. இல்லையா? Debt equity ratio. Numerator is a debt. Denominator is equal to capital employed. Debt plus equity. Am I right? In option 1, total capital employed alloda
3 crore 40 lakhs.
3 crores 40 lakhs. Option 2 also 3 crore 40 lakhs. Yeah.
Yes, sir.
Option 1 debt
1 crore 40 lakhs.
1 crore 40 lakhs. Whereas here
1 crore.
so answer for the debt equity ratio for the first one. எவ்வளவு percent வருது? Or எவ்வளவு ஒரு they have mentioned in
0.4.
percentage, right? In this question they have mentioned in percentage, right?
Yes, sir. So 41% something.
41 point something. 41.17%.
18.
Or 118 in option 1. And the second one
29.41.
29 point 31.
41, sir.
All of you 29 point.
Yes, sir.
Depending upon debt equity ratio, if it is cross 35%, then price earning will be what?
12.5.
Price earning will drop to 8.
Drop to 8. When 8 ஆகுதுறாங்கண்ணா?
Sir, 35% மேல
அப்ப which
இருந்ததுனா
price earning ratio for the first case 8, second case 10 ஆகண்ணா?
Yes,
Currently
sir.
they are in 10, am I right?
Yes, sir. Current capital structure 10.
Okay.
Option 1 to 8.
So number of shares for the second option உள்ள பாருங்க.
Sir, 12 lakhs.
Number of shares for the second option. How much share price?
10 each.
25.
How much the share price கொடுத்துக்கானா கொடுக்கலையா செக் பண்ணிட்டாங்க.
Market price 25, sir.
25. So number
Market price.
எவ்வளவு இருக்கும்? கவனிச்சுக்கோ. We are going to raise additional fund by way of equity in the second option. Additional fund எவ்வளவு lakhs? 40 lakhs.
1,60,000.
40 lakh is the additional fund. Am I right?
Sir.
Yes, sir.
Yes, sir.
Share price 25 rupees. Therefore, how many shares we are going to issue?
60,000 shares.
Number
1,60,000 shares.
60,000 shares.
1,60,000.
60,000 அப்பா.
Yes, sir.
Yes, sir.
அப்போ originally we are having 8 lakhs plus 1,60,000 we have to issue. Therefore, what will be the revised number of shares in the second case?
9,60,000
9,60,000.
shares.
Always remember face value போடாத ஹரிப்ரியா.
Yes, sir.
Number of shares be careful about. Now got the clarity or not?
Yes, sir.
Because we need fund 40 lakhs. Per share you can get 25 rupees. Therefore, 1,60,000 shares only you have to issue. Got it or not?
Yes, sir.
Therefore, EPS comes to how much now? Earning per share comes to first case
2.58, sir.
2.58 rupees, and second case
0.44, sir.
2.44.
price earning ratio first case how much the price earning ratio? Very good. Price earning ratio for the
Yes,
first
right.
8, sir.
8%.
because why 8 kana 30% cross
More
side
than 35%.
35% cross-eyed.
static ratio cross ஆனா இந்த 8 தான் price earning ratio இல்லையா? Otherwise 10 is the price earning ratio which is given in this question. Am I right? Right அடகனா check பண்ணிக்கோ.
Yes, sir.
Yes, sir.
In this case it's 10. What the formula for MPS, market price per share? EPS into price earning ratio is
EPS to PE ratio.
so 2.58 into 8 is equal to
20.6.
20.6.
20.6.
6 agana.
Yes.
64.
Whereas second case 24.4. Yeah.
0.4.
Yes, sir.
Yes, sir.
So what is preferable?
Second.
Option 2.
EBIT is preferable.
So the beginning of the session we have discussed what are the criteria for selection in capital structure. First priority goes to
Market price.
MPS. Second priority goes to
EPS.
and the last priority goes to
Return on equity.
return on.
Return on equity.
So in this problem, price earning ratio is there. We can select purely based on market price MPS. Formula for the MPS is equal to EPS into price earning ratio. For that also you have to compute EPS. Such a beautiful problem or not?
Yes, sir.
Not panninga. Here you have to conditions and all you have to satisfy. Niharika understood?
Yes, sir.
Good. Put a star mark on this question. Interesting question, important question. Revati Prida Kanna.
Yes, sir.
Completed, my dears.
No, sir.
Niharika, any doubt, Ragana?
No, sir, I understood, sir.
Yes, sir.
Haripriya, the doubt, Haripriya.
Sir?
The doubt, Kadagana.
No, sir.
Good God. Rakesh, understood now?
Yes, sir.
Okay, Chacha.
Yes, sir.
Rakesh, put sting lagana. Good. Niharika, చదవండి. Next question.
Leo Limited has a net operating income of 21,60,000 and the total capitalization of 120 lakhs. The company is evaluating the options to introduce debt financing in capital structure, and the following information is available at various levels of debt value. When debt value is 0, capitalization rate is 12%.
Yeah, debt value, interest rate, and capitalization, equity capitalization rate given in this table. Okay,
Yes.
you're always lucky. Next.
You are required to compute the equity capitalization rate if approach is followed. Assume that the firm operates in zero tax regime and calculation to be based on book values.
Try pallama.
Yes, sir.
So book back question only. Question number
9.
10 or 9 up? 9 up.
9, sir.
9,
Yes, sir.
Value of the firm is equal to, what is the formula?
EBIT divided by cost. Overall,
EBIT divided by
overall cost.
KO.
KO.
in this value of the firm given in this question. Total lakhs.
1 crore 20 lakhs.
EBIT
21
lakh 16,000.
60 adagana.
Yes, sir.
That's the 60.
So the KO you can compute. So what is the answer for the KO?
18.
18%.
18 adagana.
18%. Sir.
We got 18% is the KO. KO represent what? Weighted average cost of capital. Am I right?
Yes, sir.
Hello.
Yes,
Yes,
sir.
sir.
Based on the same, we are going to prepare. First situation. Source of fund with respect to statement of computation of WACC, weighted average cost of capital. Source of fund, cost, weightage, and KO percentage. In first situation, we are having debt and equity. Debt fund
Yes.
and
Equity fund.
Equity calculation.
so that we can compute KO. Answer for the KO 18%. Am I right?
Yes.
Now, first case debt is how much?
0.
0.
Sir.
Therefore, weightage only 1. This is equal to 18%. Therefore, KE is equal to how much?
18%.
18%. Easy or not?
Yes, sir.
Logic, Pridham. Hello.
Yes, sir.
Yes.
Go for the second case. Debt fund, equity fund. KO is equal to 18%. Debt fund is how much, Kanna?
10 lakhs.
10 lakhs.
10 lakhs.
Yes, sir.
Weightage 10. Equity fund.
Equity fund.
No. Total capital employed 1 crore 20 lakhs. Out of 1 crore 20 lakhs.
Yes, sir.
110.
Out of
1
1
lakh, 1 crore 10 lakhs.
if the 10 lakh is a debt equity mix remain yeah. So
Yes, sir.
120 is the denominator. Out of is 10 is the debt fund. Remaining equity 1 crore 10 lakh.
110.
Right?
Sir.
Are you able to follow or not?
Yes, sir.
Then interest cost of interest on loan.
7%.
7.
There is no tax, therefore as it is 7. Am I right? No tax assumption. 7
Yes,
into
sir.
10 by 120 is equal to 7 into 10.
0.53. 0.58. 583, sir.
So balance should be the equity. 18 minus 0.583 is equal to
17.4 lakh.
17.4.
4. 6.
So 17.4 into 120 divided by 110 is equal to KE.
19%.
19 upon.
Yes, sir.
All of you got 19% kana?
Yes, sir.
Let's go for the third case. Logic புரியுதா எல்லாருக்கும்? Are able to understand the logic? Nice.
Yes, sir.
Sir.
Third case. Debt and equity. KE 18%. Debt fund for the second situation. The next situation.
20 lakhs.
20 lakhs.
20 by 120. And here
100 by 120.
100 by 120. Now, interest on loan 7 kana?
Yes, sir.
Amount 7. Shows same 7. Okay. Therefore,
Same.
7 into 20 to 120 is equal to
1.17.
1.16.
1.17.
17.
Remaining
Answer.
is equal to
16.83.
therefore KE is equal to how much kana?
20.
20.2.
20.2, sir.
20.2%. Similarly, you can prepare the next situation also. No?
Yes, sir.
Study material problem only. Tuck and put. What PPS? Manaslayo?
Yes, sir.
Good boy. PPS is always active. Tuck and put. Vijay ki purida kana? Vijay ki manaslayo?
Yes, sir.
Not you are in dull mood today. What happened?
Nothing, sir.
Vijay na nee eight varadu. Kar. Your friend is பாஞ்சிட்டு வருது அங்கே.
குட்டி பாப்பா எப்படி இருக்கு சார்? ஓகேவா?
Okay. Fully paka. Revati என்னடா கண்ணா டவுட் ஆயிட்டான். சொல்லுமா என்ன டவுட்ரா? என்ன சொல்ல வரப்பா?
Sir, my son is crying.
Okay. மியூட் பண்ணிட்டு நீ மட்டும்.
Sir.
மியூட் பண்ணிக்க வீடியோ ஆஃப் பண்ணிக்கோ பாப்பா கையில வச்சுக்கணும்.
Sir, hand out clear right, sir.
என்னடா கண்ணா ஷாப்பினா overall WACC remain.
That's உள்ளுக்குள்ள ஈக்விட்டி காஸ்ட் ஏறிட்டே இருக்கு, டெட் காஸ்ட் சேமாவே இருக்கு. ஆனா ஓவரால் கேபிட்டல் ஏறவும் இல்லை குறையும்.
You have to see the assumptions படிக்கணும்.
Yes.
No approach assumption. Net operating income. மொத்த புரியுதா கண்ணா?
Yes, sir.
Fourth case என்ன ஆன்சர் பா?
Equity 21.5.
21.5.
21.5, sir.
Fifth case
23.25.
20.25.
23 என்ன கண்ணா?
23.25.
23. Check it up. எல்லாத்தையும் ஒட்டே ஒர்க் அவுட் பண்ணி பாரு. Today seems to be very easy. Faculty போகும்போது ஈஸியா இருக்க மாதிரி இருக்கும். You are going to try only, you know the real pain, right? So work out பண்ணி பாரு, homework பண்ணி பாரு. ஓகேனிக்கா இருக்கா? Try on your own one more time.
கண்டிப்பா ஒர்க் அவுட் பண்றோம்.
Okay, sir.
Go to the last problem. Such an interesting question. முடிச்சிட்டீங்களா?
Yes, sir.
Vijay, kindly read the last question. Quick, kapadi.
XR Limited has a sales of rupees 68 lakhs with a variable cost ratio of 60%. The company has fixed cost of 16 lakhs 32,000. The capital of the company comprises of 12% long-term debt rupees 1 lakh, preference share of rupees 10 each, carrying dividend rate of 10% and 1,50,000 equity shares. The tax rate applicable for the company is 30%. At current sales level, determine the interest, EPS and amount of debt for the firm. If a 25% decline in sales will wipe out all the EPS.
At current sales level, determine the interest, EPS and the amount of debt for the firm. If 20% decline in sale will wipe off
all the EPS.
All the EPS.
current sales level எவ்வளோடா கண்ணா? 68
lakhs.
இல்லையா கண்ணா?
68 lakhs.
Listen here. It's based on financial BEP concept, am I right?
Yes.
EPF wipe off. There is no EPS means what? Zero is the EPF, am I right?
Zero.
In which circumstance zero is the? பசங்களுக்கு கரெக்டாக டைம் தெரிஞ்சு கொடுங்க. எல்லாம் கரெக்டாக இருந்துருக்கு. இன்னும் வரல. Now, particulars. Current situation and financial BEP level. Am I right? That is called financial BEP. What is financial BEP? Current level minus 25%. அப்பா
ஆமா சார்.
எல்லாம் கவனிக்கிறீங்களா?
Yes, sir.
Yes, sir.
Yes, sir.
First, we can write the format so that easy for you to understand and do the filling the blanks. Sales minus variable cost is called less fixed cost is equal to
EBIT. EBIT.
less interest is equal to
EBT.
EBT. Less tax EAT. Any preference student is there?
Sir.
ஆமா சார் இருக்கு சார்.
Less preference dividend
Equal to earnings available to equity shareholders.
earnings available to equity share divided by number of equity shares is equal to
EPS.
earning per share. Yeah. In case of financial BEP, EPS should be 0. Am I right? No profit, no loss. No loss is a financial BEP. Am I right or not?
Sir, second, third column.
Here only. Am I right? Second column. There is no financial BEP at all. Am I right? Hello?
Yes, sir.
Yes, sir.
But what earnings available to equity shareholders should be 0. Generally, there is no EPS at all. Am I right?
Yes, sir.
Are you comfortable or not?
Yes, sir.
Because it's the BEP stage. Now, preference dividend is how much, Ganna? 10% on preference share capital comes to how much?
10,000.
10,000.
10,000.
We are going the reverse side. Appa EAT minus preference dividend is equal to 0 means earnings after tax should be 10,000. Right, Ganna?
Yes, sir.
Yes, sir.
Tax rate how much percentage?
30%.
30.
30%. Appa 70% is equal to 10,000 means 100% is equal to EBT. Clear, Ganna?
Yes, sir.
So 100% EBT how Ganna? This into this is 70%. Therefore, 100% comes to how much? 10,000 divided by 70% is equal to
14,286.
14,000
286.
286.
interest on loan
12%.
12% long term debt.
loan amount into 12% is equal to how much now? எவ்வளோப்பா?
Question ஃபுல்லாவே இல்ல சார்.
ஃபுல்லா இல்லையா? loan amount இருக்கா இல்லையா பாருங்க. Companies comprise 12% long-term debt. Anything missing?
So 12% on 1 lakh.
Later, Ganna.
Is 1 lakh is a loan. Long term debt 1 lakh.
இருக்கா?
சரி, கமா அது 1 lakh preference share முன்னாடி இருக்கு சார்.
Preference dividend எவ்வளோ போட்டேன்? அதனால preference dividend into 10% preference dividend ஆகுனா
Yes, sir.
அது 10,000 போட்டோம். That is correct. What about the interest? Loan amount.
சார் அது இல்ல சார் கொஸ்டின்ல.
இல்லையா? Then we can compute. Then sales எவ்வளவு இப்ப? We can compute, no issue. Current sales எவ்வளோடா கண்ணா?
68 lakhs.
8 lakhs.
இங்கே இருந்து வரும் அவ்வளவுதானே. 68 lakhs. Less 20% is equal to revised sales எவ்வளவு? 68 lakhs minus 20% is equal to
51 lakhs.
are able to follow or not?
Okay,
Yes,
sir.
sir.
Variable cost for the current situation is how much?
60%.
60%.
60%. அப்ப 60% on 68 lakh is equal to
40 lakhs 80,000.
4 lakh 8,000, sir.
40 lakhs 80 dakana.
80,000.
40.
Similarly, same 60% only that side also.
30 lakhs 60,000.
30 lakhs 60,000. Logic purida?
Yes, sir.
So contribution comes to
27 lakhs.
27 lakhs 20,000.
27 lakhs.
20,000.
Next case.
20 lakhs 40.
20 lakh 40,000.
40 dakana.
Yes, sir.
Sir.
Fixed cost
16 lakh
16 lakhs
32,000.
32,000.
16 lakh 32.
irrespective of the reduction in sales, fixed cost remains same.
Same.
Here also 16 lakh
32,000.
Lakhs 88.
EBIT comes to
10 lakh 80.
10 lakh 88,000.
88,000.
here. EBIT comes to
4 lakh 8,000.
4 lakh 8,000.
408 appa.
Yes, sir.
The balance is equal to interest on a got it or not?
Okay.
So interest comes to how
So
much?
48 times 60.
Inama?
3 lakh
3,93,714.
93,714.
3 lakh 90
3,714.
714 appa.
Yes, sir.
Now same only interest. Yeah. Interest amount remains same 3 lakh 93,714. Therefore, EBT comes to how much for the current situation?
94,286.
6 lakhs 94,000.
94,000.
94,000.
286.
EAT 4 lakh 86,000.
6 lakhs 94,000.
286.
286. Okay. 30% tax gone. Remaining 70% is equal to
4 lakh
86,000.
EAT how much now?
4 lakhs 86,000, sir.
Preference dividend remains same 10,000.
10,000. 4 lakh 76,000.
Number of shares
1 lakh.
1 lakh 50,000.
1 lakh 50.
Yes, sir.
Yes.
So earning per share comes to
3.17.
3.17
24.
appa.
17.
Now, what is the requirement of the question?
Determine the interest, EPS, amount of debt for the firm if a 25% declines in sales.
Debt fund கேட்க சொல்லிருக்கான் இல்லையா? First requirement என்ன?
Interest.
Interest, sir.
Interest. Answer for
Interest.
clear ஆகனா? Second requirement
EPS.
EPS,
EPS.
second requirement open. Third requirement
amount of debt.
டெட் அமௌண்ட் இல்லையா, டெட் ஃபண்ட் எவ்வளோன்னு கேட்குறேன். இன்ட்ரெஸ்ட் எவ்வளோ வந்தது?
3,93,714.
714.
That's how much percent interest?
12%.
12%.
Therefore, debt fund.
32,08,950.
32 lakhs
80,000.
80,950. Got it?
Correct.
All the requirement over. Such a beautiful Samarna.
Yes, sir. Okay, sir.
Charpana புரியுதாப்பா?
Yes, sir. புரியுது sir.
கன்வெர்ட் பண்ணிக்கணும். Gayatri, understood now?
Yes, sir.
Jalam, Gayatri, understood? Good. Tangamati, Surya, comfortable?
Yes, sir.
Vijay, என்னாச்சுமா புரியுதாப்பா?
புரியுது சார், இப்போ புரியுது சார்.
Very well, sir. Kailash, understood?
Yes, sir. Yes.
புரிஞ்சுதா? completely completed. Rakesh, happy? Interesting இருந்தாராங்கண்ணா?
அந்த தாளமே சொல்லியிருக்கும் இன்ட்ரெஸ்டிங்கா இருந்துச்சா இல்லையா?